Hello, everyone. So I'm happy to have all of our panelists join this panel. Yeah. So that's to give a brief introduction for our audiences of what you're doing and who you are. So let's get started from myself. So this is Jun. Sorry, I was just running back. It's a little bit. So this is Jun. I'm the vice president and technical partner of Sora Ventures. But I prefer to call myself as a DeFi native since my first project is also in DeFi. And then I really like new things, and I'm friends with all of the panelists for many years. So let's move on to Tom.
Yes, I'm Tom Soong from Zomma Protocol. Yeah, actually I joined the crypto world maybe more than 10 years. Yeah, maybe people in Taiwan may know me. And we are doing a DeFi protocol, and it's about the option. The name is Zomma Protocol. And before that, we had another project. It's a DEX called Joyso. Thank you.
Hi, my name is Jerry Lee. I am the youngest here. I'm in this space for only 2 years. So I used to work in the bank for over 20 years. I was doing my whole career life is trading fixed income and currencies in the bank. And just 2 years ago, I just figured out like a DeFi is so attractive, so amazing. So I decided to retire and resign and jump into DeFi space, and I build a term structure. The reason why I'm doing this is because I do fixed income for my life, and I find this is no such thing in DeFi. So this is something that I wanted to build up.
Hi, I'm Yewen. So I'm the co-founder of Perpetual Protocol. So we do perpetual swap on chain on Optimism. And I think that's pretty much about it.
I'm Ran, co-founder of Orderly Network. We're a shared order book liquidity across different blockchains. Currently, volume is about 200 to 700 million a day on the perpetuals. We cater to all types of DeFi builders out there. So if you want to plug into our liquidity, please feel free to ping me.
Yeah. Hi, I'm Lennix. I'm the CTO of OKX. We are one of the biggest exchanges, central exchanges, but we also build our Web3 wallet, and we also have our ZK rollup perps and DEX to be launched in Australia.
Cool. So it's our pleasure to welcome so many OGs in the space to share their opinion with us. So let's dive into the panel since we don't have that much time. So first, I would like to ask everyone, can you share a little bit more about what's the current barriers and difficulties of working or building on-chain derivatives nowadays, since most of the attentions are around meme coins or NFT things. For more advanced on-chain derivatives, it's usually more difficult to build. So yeah, I think we can start from Yewen.
I think that okay, so let me put it this way. So on-chain derivative, it's hard now. I think mostly because of performance of blockchain. It's not there yet. Most of the blockchain we use are Ethereum based, L1, L2. Scale TPS is 10 transaction per second, around there. So a lot of I guess if you compare to Binance, I think they can handle maybe 1,000 TPS right now. So that's a gap. For spot market, I think that's probably fine because the baseline guys said that the whole AMM movement actually we can bring liquidity to the retail on the smart market. People can mint their own token, project can bring their own token. But on derivative, it's much harder because because you have leverage, you want to trade at the fastest you can do. So I do think that performance definitely is the main blocker for the derivative.
Got it. Like speaking of performance, I think like Jerry or Tom could also chime in because like if I recall correctly, term structure is built in on like customized L2, right? To basically have cheaper gas. And for Zomma, it's also on ZK Sync, right? So Jerry, would you want to share some like barriers or difficulties that when you're building like term structure?
Yes, thanks. So I think clearly I agree with what Yewen said. I think just the short answer is the TPS constraint, right? Whatever we do on chain, I think this is something that we need to solve. But the term structure we want to solve the problem is on when we talk about derivatives. Derivatives basically derived from some other financial instruments, right? So what are the basic financial instruments? We don't have fixed income. That's why I wanted to come here to do this. And the way we do is that we build, because fixed income is actually allow the users to put their asset for a longer period of time. So I think the security is important, scalability is important. So that's why we build our own DK rollup. And based on this layer 2, and we trying to create a yield curve for ETH, for BTC, for like major stable coins. So I think the thing is that without yield curve, the derivatives will limited to what we have today, like perpetuals. We may trade like 10 times of the volumes than today's on perpetual protocols like products, or like Zomma's like option products, or the swaps, right? But we're still limited to like the use case we have today, right? So we wanted to create a new use case. I think that is the most important things we want is like, just like we go into the bank, we see like hundreds of different products. But here in DeFi, we don't have that many. And this is because we don't have the yield curve. That's why I think this is important. To me, this is the obstacles and on-chain DeFi.
Got it.
I totally agree Yewen's point of view. And but because for myself, and actually I trade almost maybe millions of dollars on stacks every day for the perpetual future and the options. And in my experience, the user experience is not good as stacks now for on-chain derivatives. Because actually, if I use on-chain derivatives, maybe I will use my core wallet to sign, and it's not a good experience actually, and it costs a lot of time, and actually the user experience is not good, and also there are other costs, maybe for the gas and the convert time is very long, so it's not easy to use actually, and also it has another cost for the. It's not easy to deposit US money from our daily life to on-chain. It's also a big problem.
Got it. And besides performance, do Ren or Lennix has other opinions since you guys are also, building things on chain like OKX, also expanding to on-chain things, or at least has already been building like shared liquidity order books on chain. Yeah.
Yeah, I think one of our key challenge currently is we want to make sure the mechanism of a centralized system the rules and the mechanism is on a centralized system is exactly the same as CKP proof system. Whenever there's some mismatch, so which means that even the orders being matched on the centralized matching engine got rejected when we upload on chain. So aside from performance, this is something that we're still trying to figure out what's the best way to do.
That's really good. Yeah. How about Rain?
Yeah, so there's many real life, many obstacles, like from the onboarding part, which I think OKX Wallet and other gateways are trying to solve, to fragmented liquidity. That's one of the issues that we're solving, hence shared liquidity between the chains, to many like idiosyncratic issues with like outages of blockchains, Optimism, we have a vault there. They were down for a bit of time, and then outages with bridges, right? Like we're integrated with layer 0. Layer 0 is sometimes there's blockages, and then like our users are cross-chain messaging between layer 0 and our own chain, which settles all the trades. And sometimes there's blockages there, and then users can't withdraw assets. That's a big problem. And then when gas prices go up a lot, right, on different chains, then we have to, users are withdrawing deposits, it's cross-chain messages with us, and then we have our own chain, so then all the prices go up, we might have to increase withdrawal fees, things like that. But with the latest upgrade, that's gone down quite a bit. So there's all types of issues that deals with performance, costs, and user experience. I think the user experience, like Tom said, it's not there, right? We're trying to make the experience on Orderly like that of Binance, where users are depositing from one chain, a native asset, withdraw from another chain, also the native asset, let's say native USDC, and they don't have to deal with wrapped tokens due to any sort of bridging risk, right? I think the eventual goal is to have a DEX that looks like OKX, right? And feels like OKX, but it's fully transparent, it's DeFi, and it has even the Web3 tokenomics that we love about DeFi.
Yeah, thanks for sharing. Actually, I have some like secret alpha that I will share with you about like the infinite liquidity for cross-chain thing. But by the way, so thank you for sharing so many like different like practical and theoretical barriers and obstacles around building things. The follow-up question is, there are so many barriers. So what's the singularity point that you see to solve this issue? Like from your perspective, also from, it could be either from your perspective or your protocol's perspective or in general from the DeFi perspective. Yeah, anyone want to start with this?
Actually, Zomma has launched on ZK-Sync, and everybody knows ZK-Sync is a new ZK-L2, and it supports AA account and also paymaster. I think it's a big change. And in the traditional way, we have to prepare ETH for the gas. Every time you trade, you have to sign, but in ZK-Sync, you can now pay with any tokens you want. And I think it's a big progress. And also, AA account also supports not only the private key, the traditional private key. It also maybe you can use your Google account to generate a account on ZK-Sync, and I think it's a big progress. The user experience improves a lot, and maybe it will be like the Web 2, and everybody used to use Web 2 finance. I think it's a big improve.
Got it. So from the user experience perspective, it has like some good progress, right? And then to basically approach the mass adoption. Okay, cool. So besides like user experience, and then like most of you are talked about like the performance barrier, like the difficulties, right? So after Duncan upgrade, do you see like there's some improvement right now? Or like in the near future, what do you see that could also help the performance things? Because like if there's like different L2s, even if they can improve the performance, there will probably be some like liquidity fragmentation issue as well. So yeah, anyone want to like chime in on this topic?
Yeah, I can chime in on the performance. I actually don't think that we will have centralized change or like a traditional finance performance anyway. I mean, like it's not about like our technology is not advanced enough. It's just if you want to be like decentralized, it's just hard. So I think like so currently I think people are trying different ways, like orderly, like hyperliquid, Avo. They want to build like really efficient off-chain order book and then populate the data on chain. That's one of the way. I think that's really efficient. Yeah. So and the other, I think like the other approach is like us, like Perpetual Protocol. We want to build everything on chain. So it will be like automating market maker in some, I mean like just a different design. Like we just try different designs of the automated market maker. I think just, personally, I think that these two approaches will coexist for some time, just like Uniswap and centralized exchange, they coexist because they have different needs. And yeah, but that's just, yeah, in short, I think performance cannot be achieved. And then people just need to get around.
Yeah, a little bit like side notes, because yeah, I totally agree with that. Because like AMM and order books will be coexist forever. Because like there's, in my opinion, there are like serving different serving different problems. So there will always be different target audiences will use this type of like two types of things. Because like when AMM was firstly introduced, it was supposed to solve the long tail asset issue for the liquidity. Because like usually in a traditional finance, if it's order book based, there's no stupid market makers want to like come in and actually take the counterparty risk of like tokens. Yeah. So yeah, agree with that. Probably like I'm also curious about like what's Rain's point of view on this, because like it's like share liquidity books that Order is currently building, but it's on chain, and then it has to solve the performance issue right now, right? It will definitely be like less efficient of like building a centralized order book. And I know like your teams also have the background of like traditional finance and then do like high frequency market making and also do like asset management. So what's your point of view like doing a share liquidity order books, or what's the point of that? And then how the performance issue affect your strategy or the roadmap of Orderly?
Yeah, I think we're trying to be as, like, it's all about users at the end of the day, right? So we have two types of users. One are the protocols building on top of us, whether the AMMs or centralized exchanges or whatever. And then it's their users. So then that experience has to be good, right, for them to even want to use it. And it's got to be good or as good or even better than centralized exchanges for that shift from CeFi to DeFi. And there's so many components that come from that. It's not even just about us, it's about the onboarding, it's the fiat on rails into DeFi. I mean, a lot of missing pieces. There's about KYC or ZK KYC. So we're just solving for the liquidity and chain abstraction component of this equation, and we're trying to do it as decentralized and robust as possible, right? But at the end of the day, if the performance sucks, the users are not going to use it, right? So we have to consider that first. So our solution currently is an off-chain order book, so kind of similar to DYDX V2. And then it settles on chain, our own orderly chain via OP stack. So then all the balances and trades are printed by block onto the chain, which links via layer 0 to all the other chains that we have our custody vaults. So then if our centralized order book shuts down for any reason, then users can withdraw their assets if they want based on the data on the chain, right? So there's no asset risk. But eventually we do want to put the whole order book on chain. I mean, DYDX has a way of doing it, right? That seems to be working for them. So, I mean, there's different possibilities. And I think the technology is upgrading at a speed that will allow us to achieve this in the near future. I mean, I don't think it's going to be, it's going to take forever. It's going to take many years to do this, right? So the point of singularity, I think, is still the experience has to be the same, if not better than centralized exchanges. And then DeFi has lower cost, right? Less people needed and utilizes the community. Versus like 4,000 person centralized exchange. So then there's a big cost advantage here, right? And then the tokenomics are such that everyone is rewarded, or I mean, that's the way it should be, is for their contributions, right? Whether they're a token holder, whether they're a trader or whatever. And that's also non-existent or barely existing in centralized exchanges. So I think it has all the elements there, the performance and the liquidity, and there's permissionless listings in DeFi, which I think is key, right? So once that's all in place, I don't see any reason why the volume would not shift towards DeFi, and eventually even from TradFi, given all the custody solutions and the regulations and the KYC, all that stuff is in place, right? So I think that's kind of the point of singularity. I don't think it's going to take 10 years for that to happen. I think it might be 5 or even less. Yeah.
Cool. So Jerry also come from like, if I recall correctly, also come from TradFi from Dash Bank, right? So like from the traditional financial person perspective, yeah, what's the different? What's the singularity points for you? Because like you have like both experience in CFI and DeFi. Yeah.
All right. I think this from fixed income perspective, right? Because I think this is the big difference between these swaps or these the futures or perpetual futures or fixed income. It's just the big difference is like the fixed income in real life. We actually I think the most of the retailers they don't do fixed income directly with the interbank markets or with the wholesale markets because there is always like an intermediary, so that we go through like the banks or security house or insurance companies or asset managers to purchase fixed income related products, right? But here in DeFi, it's different. Right? So we actually have a direct access. We allowed like permissioning from retailers and also institutions. So I think the big difference is like we need to create something actually easy for retailers to understand and to use. But at the end of the day, I think for fixed income, because of the nature of the products, you still need like institutions to help to push. Like, or for example, like ETF, right? So we have to have institution help to push to get the different level. So same as the fixed income, right? If we can like extend the yield curve, right? You can get the yield curve up to like 6 months, 12 months, or 1 to 3 years of like interest rate on ETH, on BTC. Then you will have a different scope of DeFi markets, right? So I think this is something that we wanted to build, and also the key difference is like the fixed income. We have to go to peer-to-peer or the book or the auction process because it's not like swaps or perpetuals that, for example, if you think of the bank's savings account, you put your money into the pool, right? And then some people have an OD account, like overdraft to borrow from the bank, right? The bid offer is wide. Or if you can think of like you put like 4 billion in Aave and somebody borrow 1 billion from Aave. What does that mean? That means that the interest rate they paid by Aave for the 1 billion, let's say for example, is 4%, right? The depositor only get 1%, right? The capital inefficiency on the pool actually make this the fixed income is very difficult to work. So it has to be the peer-to-peer for fixed rate borrowing and lending. So I think that's the fundamental the characteristic of the instrument. Make it like the peer-to-peer efficiency much easier to understand against the swaps or futures.
Got it. Yeah, thanks for sharing. Since we are all talking about like barriers and difficulties to that, let's talk about like more much happier stuff. Like, so what do you guys see as the most interesting part coming to DeFi in the near future, or at least in the foreseeable futures within just like 5 years? Yeah, let's start from Tom, since you're like, since the option is like more complicated or more complex than it's built on top of in DeFi space, instead of like lower hanging fruit like DAX or money market, right? So yeah, what do you see as very interesting in the future?
Like what I said before, I think the improvement of the L2 and the speed of the enhanced actually I think there is a big improvement from in L2 for the gas after Duncan upgrade. So I think this improvement and will decrease the barrier for the users to use L2. From the very beginning, we use L1 chain, and if you sign a transaction in Zomma, maybe it costs maybe $20, and but it only costs maybe 0.1 cent now. So I think it's very good, and also as I mentioned, if the AA account and paymaster, you don't have to prepare ETH for the gas, and I think the user experience improves, and which will attract more people to use the DeFi, and that will happen in the near future.
Got it. How about Lennix? Because like OKS is probably the newest compared with others. Like you recently just like started tapping into DeFi and want to expand more. So you probably be more optimistic about the space. And how do you see the space? And then what's interesting that thing or next things that will be integrated into OKX as well?
Yeah, I think the best role for OKX to play is to sit between central exchanges versus DeFi, decentralized space. We are, I think we are reaching a massive scale, and scale that's whether or not we can somehow bridges in regulated manners that in some portion of some components of DEX or decentralized space, DeFi, that can somehow be introduced as to under regulated space. So we can tell you that regulation is always coming, and I'm sure that you can't hide forever. That's because permissionless is decentralized, so there's no regulation coming in place. No, the question is whether or not the regulators have whether or not the sufficient understanding of which element that's defined to be regulated. And OKS happened to play a role that we got the license all over the places, and whether or not we can introduce at least some portion of the DeFi to regular space. I think that's massive. That could be massive to bring in regular capital into this space.
Got it. Yeah, the regulation is another thing that would be like the next very important things in the space, and everyone will face that. Yeah, do you want to comment on the news last night about like OKS removing to gonna remove all the Indian users? Oh, no, just kidding. No. So what's like Rain's or like Temple's or Jared's views on the interesting part? Because like from my perspective, let me also share a little bit about like my opinions on this. Because like it seems like it's been a while after DeFi 2.0. There's no new breakthrough in the space. Like, oh yeah, you will probably see a lot of like new perps DAX every day and using a little bit different mechanism, but most of them are just like competing the same liquidity, basically, right? Or there will be projects like saying that I'm doing like options related stuff like options votes or options AMM. Like there are more and more of that, and then but eventually they will pivot themselves into like options perf or something, right? So I'm just curious because like I still don't have an answer right now because like what's the next innovation or what's the next experiment that we can do on chain from the derivatives perspective? Probably like 0.5 options, something like that, or what Pranoptic is actually exploring right now. Do you guys have any opinions or any idea or thoughts that could share with us?
Actually, yeah, you're right. I think like most of the perp DEX right now, we compete on points or airdrop. So like just depends on the airdrop. Like you can attract people definitely, but that will not last long. And to me, there are like many new projects like really interesting. Like Infinity Pool, they have this like you can leverage up, but you will not be liquidated. I think that's given design and like baseline the same. You can leverage up, you will not get liquidated. I think like a lot of this concept actually like have evolved from Uniswap v3, the SYK model. I do think that that's probably like one of the breakthrough that if we only look at on chain, like I do think that someone can make it like Penarchic, also a good example. Someone can make it. Really working for the retail. I think that's the key. So there are definitely new mechanisms, just like it's just too hard to understand. It's just like they are like certain, you have to like use it in certain situation. But once we have enough knowledge that we can solve that, then I think that will be a breakthrough.
Got it. Yeah. How about Jerry? Because like you're building fixed rate thing. Like you're also like exploring this field with like bringing the traditional finance things on chain, right? And then it's from what we claim, it's still like lacking in space and not so many competitors. So you definitely will have a very like great thoughts that could share with us.
Yeah, I think definitely increasing the new use cases is the most important things. I think we are expect the DeFi space to expand, right? So right now we've seen even like just like I mentioned earlier, the volume was traded like a double, triple, 10, even 10 times. But what is the use cases, right? So and then of course if we just take one step back and then look around, like what do we want our like descendant to use the blockchain, and what do we want them to find this to live with that, right? So we want them to have a like a real estate, also on-chain asset at the same time. So everyone on the street, they have a real estate, they have an on-chain asset, right? They manage asset liability, they match their duration of all these their own balance sheet for the corporates, for the institutions, or even for individuals, right? So I think this is the key thing. How do we get there, right? We needed to get there with the, of course, the most important is the fundamental infrastructure technology on this, the blockchain that we are all mentioned about, right? There's all like UI, UX, all TPS, all this, all the different the process that we can L1 or L2 or even L3, right? So we know that it's not going to compete with the TradFi's efficiency, but it has to be somewhere that we can reach out. So I think this is something that I believe that this is the most interesting part to see in the future is that you're getting more like a mass adoption on the on-chain assets to everyone.
Got it. And what? Okay, so how about Lennix and Rain and Tom? Do you think like what's the next interesting or derivatives that you see in the space? And probably could just be like theoretical or something like a RWA based like YAS tokens or baseline things. Like yeah, sounds like yeah, probably crazy or probably just there. Yeah.
Yeah, from my perspective, I've been in TradFi for 10 years or so before getting into crypto. But a lot of the innovation can just happen from utilizing what's worked in TradFi and adopting it to crypto, right? Some of the, and adding in a few components, right? Like the decentralization or the user participation of it, like AMMs, right? Or like Perpetual or GMX, right? Like the user participation of it into the product, right? Using the blockchain instead of centralized databases, right? Like, I mean, in our case, we have a chain just to settle trades. Like, why can't that replace CME clearing, say? Why is our clearinghouse is not just on the blockchain, right? It should. And I mean, it becomes somewhat obvious for some of these, like what we call innovations in crypto that came from TradFi, but there has to be adoption, right, and really leveraging the blockchain. So I think a lot of that is interesting. And I mean, options is a small space that's huge in TradFi, like fixed income, right, all of this stuff. And I think it's all coming, right, and even the RWA stuff. So like I think there's a ton of, it's just like, so basically I think my formula is the TradFi concepts and markets, reshaping that demand and product to CeFi or DeFi, fully utilizing the blockchain, figuring out how to get users to participate in everything instead of us selling product to users kind of goal, right? And also adding in tokenomics that really reward all the contributors, which is what Web3 is supposed to be about. And there's going to be very interesting stuff that gets built. So yeah, that's my perspective.
Yeah, I think I don't see why the traditional asset class in finance that cannot be tokenized. I think everything can be tokenized, especially fixed income. So if think about that, if think about let's say 30% or 50% of current crypto assets is actually with the underlying of based on underlying of traditional asset class like treasury bonds and different kind of debt instruments. I think that substantially increase the portfolio of the entire DeFi space. And because of DeFi, the accessibility of those kind of assets will be substantially increased and massive adopted in global scale. So everyone can just hold a tiny piece of treasury bills, even the fact that without the minimum amounts of holding at the moment. So I think that's what we call the real financial inclusion. Right now, the current obstacle for tokenization of these kind of access probably is only related to regulation. And right now, the regulation is keying different kind of roadblocks. So I think that's must be gotta be much more exciting the current trend.
Got it. So do you see that if the regulation gets clearer and clearer and be more certain, so do you see the situation will be better?
Very easy. So the very first roadblock that we clear in terms of regulation is what is Bitcoin, right? What is Ethereum? And how to trade, whether let's trade on OKX or trade on Central Exchange, or how to custody this kind of wallets, these crypto assets. The next step of crypto regulation got to be related to tokenization of US dollar, tokenization of treasury bonds, tokenization of, I don't know, what kind of national debts. And that, if that can tokenize, so why not put in Uniswap, AMM, whatever on trade in global scale? So probably in less than 2 or 3 years, somebody from India can have a crypto wallet, OKX wallet, and buying a 80% portfolio holding treasury bills in US.
Yeah, that's a really great point. How about Tom? Because like option is definitely in the frontier of advanced derivatives.
I'm very happy to see there are so many innovative and interesting projects on blockchain, such as Baseline, ES token. But and also there were many stable coins, calculation stable coins, but they failed. So in Zomma's point of view, we may not think a new idea and just write it to the smart contract and release to the public, because someone may lose money inside, and I'm not happy to see that. So, but we will see the successful experience from other projects and take the good part and to our new project. So I think that's what I think.
Got it. Yeah. Thanks everyone for sharing this idea. Let me conclude this. So it seems like for building on-chain derivatives, still having a lot of hope, right? And we definitely see there will be so many coming difficulties and barriers. And it seems like from the infrastructure perspective, yeah, the performance part, right? We are waiting for the performance to catch up. Like for an application level, we can also see that there are a lot of progress around probably intent or AA actually making like more abstract the blockchain part more. And we also see that like from after regulation got clearer, probably like the regulated liquidities will come in and actually can solve like most of the problems, since like liquidity is always the problem. So yeah, it seems like you still are having a lot of hope, and then hope our audience is also enjoying this panel. And yeah, thanks everyone for like joining this panel. And then let's give all of the panelists a great applaud. Yeah.
Thank you, Jun, and thank you, speakers.